Just one thing. I just want to talk to you about one thing. This guy right here has it right. Just one thing. Today I'm going to talk to you about Sofi. Now, welcome to my channel and welcome to my video. I'm Uncle Bruce. That's what my viewers call me, Uncle Bruce. Welcome to Stock Markets with Bruce. I'm talking today about Sofi and just one thing, really. I get asked all the time by my viewers because I am live Monday to Friday every day when the markets are open from 8:30 Eastern time until about 10:30 Eastern time. So an hour before the opening and an hour during the opening. And I get asked one thing all the time. When is the stock going to go? When is it going to start moving? What's gonna make the stock go up, and when is it going to happen? Maybe it's a two-part question, but it's not that complicated. But it has to do with our friends here at SoFi, and I got to tell you, I am a fan of this company. Many are, and I would love to tell you exactly the moment it's going to happen. I can't give you the moment, but I think it's soon. But I can tell you what the one reason will be why this stock is going to make its move when it makes its move. You have to understand that there's a lot of good things going on here at SoFi. We just had the fourth quarter financials just a couple of weeks ago. First time the company ever reported a profit was the third quarter of 2020. Fourth quarter of 2023, just the last quarter of the month. They're making money this quarter and for next quarter and the next. I mean, they're now they've broken even, and now they're going to make more money every quarter. This is kind of a given among those who grudgingly follow the stock. Some are grudgingly following the stock and don't want to admit that, well, yeah, they've kind of broken the economies of scale and they're now so big with their memberships and their growth curve that, yeah, they're going to make more money every quarter, but they don't want to tell you that because some people are negative on the stock and they want to justify why they want to be negative, for whatever their reasons. Okay, but there's just one thing. There's one thing about this stock that's going to make it go higher. And yesterday or day before yesterday, we got the reason for it. Take a look at this quickly. This is a 5-day chart of the stock that ended just on Friday. This is today is Sunday, February the 11th. This Friday, February the 9th, you can see where the stock ended up in that 814, 813 level. If you look just above my finger, you see 813. That was Friday's official close, but the big 814 up there, after hours trading. Okay. For the last month, look at this. January 29th, you saw it spike. That was the day of earnings, so it had a little run up there. Take a look at this chart. This is a 3-month chart. You can see the January 9th spike at the very end over there, the last spike, but that big bulge in the middle. You see that one? What was that? You're asking me. I'm telling you what that was the end of tax loss selling. You'll notice that on the very bottom of this chart, go over there, you'll see December 23rd, and then just very shortly after that, stock went up. Well, up until December 25th, 26th or so, that was the end of tax loss selling, and no one had any reason to sell the stock. So it went up temporarily into January, as you can see, and then that little spike on the earnings date. Look at this chart here. This is a 1-year chart of SoFi from February 24 on the far right there, all the way back to February 23, okay? And we had been as low as 450, I think, in December. The shares kind of got up to 7 something, and they backed off by May, June, back to the 5 level, just under the 5 level, just a little. And then look at that pop, June into July and then into August. That was the high of the year at that time. I believe the high of the year last 52 weeks is 1170. And in August, it managed to do it. And then we backed off all through September, October, November. And then, of course, tax loss selling ended and the Dow and the S&P began this record run we've been on. And so SoFi got a bit of a wave of that and got a little pop for the January 29 day. Okay, so there's all of that. But that doesn't explain what that one thing is. And I'm now going to show you what the one thing is, and I'm going to explain it to you. First of all, look at this here. This is the, if you go to marketwatch.com, you'll see key data on the stock. The very top, this side here, the very top, open 819 day range. This is Friday's trading, 808 for the low, 835 for the high. Then the 52-week low and high, 445, 1170. Market cap as of the close, 7.79 billion. Shares outstanding, 958 million. Public float, 886 million. The difference is the management held and insider held stock that can't be easily traded unless SEC gives up permission to do so. Beta, I don't even know what that means. It doesn't matter. Revenue per employee, doesn't matter. And PE multiple, they don't have a PE multiple yet. They'll have one in a few more quarters. Earnings per share for the last 52 weeks recorded is 35 cents, but you take out some of these depreciated write-offs and it's like 6 cents or 8 cents. Doesn't matter. Yield doesn't matter. Dividend doesn't matter. But now let's get to what matters. And that's this chart right here. I just blew up the bottom portion of that chart for you, okay? So take a look here as I reposition my little face down here. Okay, so forget ex-dividend date. Short interest, there's the number. There's the one thing. 150,790,000 shorted as of the 31st of January, 2024. That's the thing. Over here, just above me, is 17.1%. That is 01. That's 17.01% of the total shares free trading. All right. So 17% of all free trading shares are represented by the 150 million. That's how many are short. And an average daily volume nowadays is just about 51 million shares, 50.93 million. Okay. And that's the thing you need to understand when I say just one thing. Okay, just one thing. It doesn't matter whether there are more buyers or sellers. It doesn't matter whether the Dow's having a good day, a good week, a good year, a good all-time high. It doesn't matter if S&P, NASDAQ. It doesn't matter if Apple posts great profits or if AI technology is the best thing or presidential polling is going one way or another. It doesn't matter. None of that matters. The one thing that matters where I've come from is at the end of the day, the buying has to be the kind of buying that is made by investors who are going to say, I'm going to wait 5 years before I even think of selling this stock, or 10 years, especially pension funds and hedge funds and mutual funds, these long-term institutional investors. A lot of private people are the same way. A lot of retail investors think longer term because they don't like to trade a lot. They just kind of want to make a position, sit on something, and fold their arms and wait. But the thing is, and there's this thing, okay, you can't have a stock go up if the sellers feel that they, by selling stock they haven't got, can suppress a market. Shorters. If short sellers believe that they have more power than the buyers, they're going to have their way with this stock. And what we saw from December until January was the number of short sales, number of shares being shorted on SOFI have risen 20 to 30 million shares. And we are at one of the highest numbers ever recorded. So one of the highest numbers of shares sold short in the history of SOFI's existence. And yet, on the 29th of January, 2 days before this report, the company released financials that for the first time in their 12-year history revealed that they made a profit. Why would the stock of SOFI have its highest ever count of shorted shares in its history 2 days, Wednesday? This report came out on a Monday, the profits. By Wednesday, 150 plus million shares were shorted in the company. And the reason is that, the one reason is that shorters don't fear the buyers because they believe that the volume of activity in SOFI is so great that their 150 million whatever share count number is not relevant to stopping. As a matter of fact, 118 million were shorted by the 24th of the 24th the 24th of December. So from December 24, 118 million to 150 odd million shares shorted. They don't fear them, but they should, because shorters are their own worst enemy. When too many of them get the same idea that it's easy pickings, if the stock takes a pop, we'll just short the stock, and then when it backs off, we'll buy it back. The problem becomes when they get so full of themselves with confidence, they short stock at 9 or 8, and it goes back to 7, but they think it'll go back to 5. And so they don't buy it back, and it goes back to 7, 8, 9, and they short more, and then they wait for it to come back to 4 or 5, and it doesn't come back to 4 or 5. What ends up happening is stocks sort of do a 1-2 step. 1-2 step. 2 steps up in price, 1 step down. 2 steps up in price, 1 step down. And this pattern, it's a game we used to play as kids on stairwells, will continue on and could continue on until the point where the stock doesn't even break $8 anymore. Then it won't break 9. It won't go down enough to even let them break even any longer. They're now carrying a loss, but they're good with it. The shorters are going, well, I'm down 10% if I were bought in right now at $9, but this will go back to 5. Let's short more at 10. And they want to lift their short average price by selling at higher and higher prices. So, for example, if you're short 1 million shares in your hedge fund, your average is $8, and you short more at 10, and you can raise your average short cost to $8.25, the stock only has to go to $8.25 for you to break even. And if it goes to $8.25, $8.50, but you don't buy it back, and then it goes up to 11, and you short another 100,000 shares, you're now 1.2 million short. You just raised your price to $8.50, let's suppose. So now they sit back, our average is $8.50. What's the worst that can happen? And, from 11 to 9, 11 to $8.50, we're already even. It doesn't have to go back to 5 or even 6 or 7 or even $8. It goes to $8.50, we're already doing great. Stock goes to $13. They short another 100,000, raising their average price to $8.75, $9. Comes back to $10.50. They only feel like they're only out $1.50. They feel as comfortable being out $1.50 at that level as they were when the stock was $7.50 and they were short at 9, or the stock was $7 and they were short at $8.50. They go, we're close. It's $1.50. No big deal. It trades a lot of stock, all as well. But there comes a point of the tipping point, that one thing where the number becomes so large, it represents too many shares versus how many shares are actually free trading. And when a company comes out like Sofi with an announcement of their first quarter financials, which will come out in April of this year, less than 3 months from now, they will report how they did for January, February, and March of 2024. This is February the 11th. We're almost halfway through the first quarter. Now, it could be that the shares won't get a jolt on the upside until April when the company reveals their financials. But something else could happen, many things. And one of the things that could happen is the company makes a press release by the end of February as an update with a revision of their projections. So they announce prior to an opening early in February that in the first 2 months of the quarter, it is appearing to us that our first quarter financials and our second quarter financials, and we're lifting our estimates to reflect the fact that we're making more money than we thought we would make 3 months ago when we told you how we were doing. That can create a wave of buying into Sofi right there. That convinces a whole bunch of people to go, I was thinking of selling this stuff, noticing on Bruce's chart the other day, that 5-day chart right over there, I kind of noticed the shares were at 8.14. And I bought a bunch of this stuff in the 750 range, and if this gets to 9, I'm just going to take a quick flip and say thank you very much, Bruce. I love making money with this stuff. But if these guys are going to revise their numbers and announce that their first quarter coming up and their second quarter, third quarter will be higher than they had previously thought, this could create a bit of a scenario where people decide, I don't think I'm going to sell my shares right now. I was going to do a quick flip for like $9 or $10, but I think I'm going to hold off because, the last time the first quarter came out, the stock went to 930. Last August, it went to 1170. They might hit a higher high than that. If I wait a little longer, maybe I'll get another $2 or $3 a share. And that's really worth my while because, with a $758 average, I'm long this stuff. I'm going to love it. The shorters, unfortunately, are going to go, wait a minute, hold it a second. Too many people here are getting too patient with this stock and this company's prospects, and they're not dumping their stock like they used to. They used to get afraid when it got up a little higher. They just dump it because it's going to falter. It's going to falter. It's not faltering so much anymore. That puts the shorters in a difficult spot because if you go from 118 million short to 150 million short and maybe 175 million short, Houston, we have a problem. And just one thing can upset everything. Now we have an ongoing short squeeze beginning to take place. And not only will the shorters smell something off, so will the folks who are daily trading this stock. They'll smell something and they'll go, wait a minute. We got a whole bunch of shorters out here who are just short a ton of this stuff. And their averages are so low. They're already hurting $2, $3. Like they're $2, $3 upside down. This thing pops $3 or $4 more to $15. These guys are going to be down $7 a share on 170 million shares. That is a billion big ones here collectively. And then the company does come out with their first quarter results in early April, and they beat the street just like they said they were going to beat the street, and they're upping their forecast for the rest of the year. PE multiples are going to start to come into play here. People are going to go, well, what should this thing trade at on price earnings multiple? If their full year guidance suggests they're going to make 30 cents for this year, or 35, 40 cents profit, they make 40 cents profit and they trade at 40 times earnings. That's a $16 stock. And if they're saying in 2025 they're going to make 80 cents profit, 40 times that's $32 a share. Where should the stock be now if I know it's going to be at 32 in a year and a half? This is the one thing that shorters cannot have, and they cannot have more of them. And right now, everyone's piling into this party. There's a big party going on that the short sellers think that they are, they're winning at, they're having a good time at, and they're realizing they might be in a position to realize very shortly that there are too many of them and not enough panicked sellers to want out. And this one thing could lead to a huge disaster for short sellers. And there is no mercy, and there is no, I have weeks of time to buy back my stock. They might get the phone call from brokers who say you have minutes to buy back your stock, or bring in 100 million for your account, 50 million for that account, to cover your position with a little more cash to make us feel a little more comfortable. Because the higher this stock goes, every time it goes up $1 with 150 million shorted, that's 150 million in losses for the shorters every dollar. There's all that. Last thing I'll mention to you, I've mentioned this on my live show for those of you who don't follow me very, very often. I talked last week about Rocket Lab and Uber. And I talked to you guys in a video about how they raised money, a lot of money. And they did something called a capped call transaction arrangement with their broker. And this has helped Uber tremendously because their shares were in the low 40s when they raised $1.7 billion on a senior note offering convertible into stock. And the shares are now in the low 70s, and that's kind of the price of conversion, but you can't convert the stock unless the stock goes to the low 90s, and it's on its way. On Rocket Lab, The stock was around $4 a share, having been at $5. They did this deal for $355 million, convertible at $5.13 a share, but it can't be done unless the stock breaks 657. And we are now in the 435 neighborhood or something like that, having been down as low as 390 a week and a half ago. So that one is starting its run. I put it to you, if SoFi were to make an announcement in the next week or two that they are entering into a capped call transaction financing arrangement for $2.5 billion to raise how much cash they have on hand to blow their loan portfolio to another level. They put together a cap call transaction deal. I can see the conversion of the stock being in the $12.50, $15 neighborhood, where the shares have to at least trade at 18 to 22 a share for the conversion to happen. And the top end of that deal could be worked out at maybe $30 a share. The end game would be that SoFi would raise $2.5 billion in fresh cash immediately, but it would also take about 200 million shares or so off the street from the free trading number that I've quoted you, these 886 million shares. It would bring the free trading float down to 680 million, 630 million. And right now we have 150 million shorted against the entire amount. This could change everything. This would be the biggest short squeeze since GameStop, if not even larger than GameStop, because I think the street will quickly put two and two together and go, oh my God, the amount of shares shorted versus the demand for paper down here at this 8, 9, 10 level, knowing we're going to convert at 1250 but only until it reaches 16 or 18. I think this blows the entire thing wide open. And for the shorters, it is the worst possible news, and it won't go away. It will be over their heads. For retail investors, it'll give them confidence to get in. For institutional investors, they're going to want to get a piece of this action because they also know this thing's going to $30 and they're sitting in at a guaranteed $12.50 to $15 entry level. They're going to want in. That could also happen, but that's another video for another day. In the meantime, thank you for joining me today. Catch up with me Monday to Friday, live, 8:30 every morning Eastern Time. We talk about the stock markets in plain English. I train my viewers how to write stock options and get paid money just to hold stock. Good God, can you do that? Can you do that? Can people actually be paid to hold stock? You can charge rent to your shares in your account and get paid rental money through option premiums. It's truly incredible. The institutions do it in a big way. I help retail investors how to understand the options market, but you got to join me Monday to Friday on Stock Markets with Bruce. Come on in, take the classes, have some fun, and don't forget, there's only one thing that can make everything change. And well, we'll see how it goes on Monday. Thank you for joining me today. Enjoy the Super Bowl tonight. See you tomorrow. Bye for now.